Okay, so you grab that carton of milk, maybe a block of cheese, or that tub of yogurt. And you probably don't think much beyond, how good it tastes. But behind every single one of those dairy products, there's this whole complex world. Economics, production, trade, it's all in there. Today we're doing a deep dive. We've got this report. It's called Dairy Digits, and it's packed with key market indicators, trends, figures. Basically, it paints a real picture of what's happening right now in the dairy industry. Our mission, well, it's not just to read out numbers. We want to really unpack them, understand the stories they're telling, get the bigger economic picture, and figure out what these dairy digits actually mean for this vital industry, and ultimately for you and your daily life. Right, first up, the farm gate, where it all begins. How much raw, unprocessed milk are we actually talking about? The stuff going from the cows to the processors. Looking at the raw numbers, there are some interesting shifts. So in 2023, the figure was 3,339,000 tons. That was actually down slightly, minus 0.3% from the year before. But then look at 2024. It really bounced back.
Hit 3,458,000 tons. That's a pretty significant jump, plus 3.56%. And even looking ahead, the estimates for 2025, well, April alone is projected at 246,000 tons, which is down a bit, minus 1.8%. But the total for January through April 2025, the estimate there is actually up again, 1,060,000 tons, so plus 0.75%.
Yeah, and what's really fascinating here, I think, isn't just those annual totals, but the monthly rhythms, the pulse of production month by month. If you look at the trends, say from January 2021 right through to April 2025, you can see these really clear patterns. You typically get peaks around the end of the year, early in the new year, and then often dips sort of mid-year. And this cyclical nature, well, it forces the industry into this constant balancing act, a high wire act, really, of managing inventory. Think about all that excess milk from the peak seasons. It has to be processed efficiently into things that can be stored, like milk powder or cheese, just to meet that consistent consumer demand when production dips later in the year. It's a real test of their logistics, their agility.
That makes total sense. Yeah, managing those peaks and troughs.
Yeah.
Wow, that sounds like a massive logistical headache. Are there specific strategies they use, like you mentioned, converting excess milk into powder? Can we see that reflected somewhere else in other market indicators? Or does it mostly just, put price pressure back onto the farmers?
Oh, absolutely. The processing side is crucial. It plays a huge role. When you've got loads of raw milk coming in during those peak seasons, processors often divert it. They turn it into products with a much longer shelf life. So yeah, things like full cream milk powder FMP or skimmed milk powder SMP. And this kind of strategic conversion, it helps balance supply and demand across the whole year. But, and this is the key bit, it also means the profitability of those storable products becomes really critical. If, say, global prices for milk powders are low, well, that can definitely translate back into pressure on the raw milk prices, right back at the farm gate.
Right, okay. So we've seen the kind of ebb and flow of milk production within our borders. But like you said, no industry just exists on its own, right? And dairy, maybe more than many others, is truly global. So that brings us to the next big question. How much dairy are we sending out, and how much are we pulling in from the rest of the world? And here, well, the numbers tell a really dramatic story. Quite a shift in our country's role. Let's start with imports. In 2024, there was a sharp decrease. Dairy imports dropped to 33,900 tons. That's a really significant change, minus 30.1% compared to the year before. And this trend, it just kept going into early 2025. January through April, imports were at 8,500 tons. That's down another 33.6%. Okay, now let's flip to exports. In 2024, we exported 53,500 tons. That was actually a decrease, minus 4.63%. However, look at January through April of 2025, a really strong rebound. Exports reached 19,500 tons. That's a healthy increase, plus 12.1%. And get this, if we broaden that view slightly to include exports to other SACU countries.
The Southern African Customs Union partners, yeah.
Exactly. For January through April 2025, that figure jumps to 64,700 tons, which is an impressive plus 9.7% increase. Wow. So, I mean, it's a significant drop in what we're buying from overseas and a rise in what we're selling.
Yeah.
It really makes you wonder, doesn't it? Are we seeing some kind of fundamental shift towards maybe dairy independence?
It absolutely does make you wonder. And if we connect this to the bigger picture, these import and export figures, especially if you look at the cumulative net imports, which are shown in one of the charts, it reveals this really dynamic balance. A big drop in imports coupled with that rise in exports, well, it could indicate increasing domestic self-sufficiency. Or maybe changing trade relationships, perhaps, where our local production is meeting more of our own demand. Or maybe finding stronger markets internationally. This shift, it suggests a potential strengthening, maybe a hardening of our local supply chains. Perhaps it's a response to, global instability, or maybe even a deliberate push towards food security, making the domestic market less reliant on those external shocks.
That's an interesting thought, the self-sufficiency angle. It sounds quite positive, but hang on. If we're importing less and exporting more, does that mean, well, are domestic consumers facing higher prices maybe because local supply is being diverted elsewhere? Or is it possible local demand itself is actually softening? What kind of factors could be driving these really substantial shifts in our trade balance?
That's a crucial question, absolutely. And while, yes, increased exports could theoretically tighten domestic supply, the data we have here doesn't immediately scream that consumers are bearing a significant burden through higher prices, specifically because of this trade shift. The main drivers are more likely, I think, a combination of things. Global market dynamics, for one. Maybe international prices are just more attractive for our exporters right now, but also domestic factors. Perhaps increased local processing capacity, making us better able to handle our own milk. Or even, like you suggested, a deliberate strategy to rely less on imports. It could also reflect a shift in what local consumers prefer, or maybe just a very competitive domestic market keeping those retail prices in check, even with these trade movements. It's complex.
It really is. Okay, so from those big global markets setting the stage, let's zoom right back in. Let's talk about the fascinating and often frustrating economics right here at home. The pricing puzzle, what farmers earn, what the processors pay, and then what eventually lands in your shopping cart. Because what farmers get, what dairy processors pay, and what you ultimately pay at the supermarket. They can be very different stories, can't they?
Oh, definitely.
Each reflecting a different step on that journey to your fridge. If we look at international prices first, there's a chart showing butter, skimmed milk powder, SMP, cheddar, and full cream milk powder, FMP, from way back in January 2014 up to May 2025. You can see quite a bit of fluctuation there, bouncing around. What does that kind of volatility mean for our domestic market?
Well, what's really striking is comparing those international trends with our own domestic producer price indices, the PPIs. So we have the producer price index for unprocessed milk. That's basically tracking what farmers are getting paid for raw milk. It's based with December 2023 is 100. In April 2025, it was 100.5, which is actually down 5.81% from the year before.
Down. Okay.
Yeah, down. However, the producer price index for dairy products, so this tracks what processors are getting for finished goods like fresh milk, UHT, cheddar, yogurt, ice cream. For April 2025, that index was 104.4, and that showed a slight increase of plus 0.2%.
Oh, interesting.
Isn't it? And then there's one more piece. The Farm Requisite Price Index, this tracks the cost of inputs for farmers, feed, fuel, fertilizer, that sort of stuff. For October 2024, that was at 142.9, based back in 2015, and that was down 2.66% from the previous year. So, you have to think about the dairy farmer, right? 1 month, the price for their milk dips. The next, maybe their input costs shift too. It really sounds like riding a financial roller coaster, just trying to get that milk from the farm to our breakfast cereal.
Wow, yeah. Okay, so declining prices for the unprocessed milk going to the producers, but a slight increase in the price index for the overall finished dairy products leaving the processors. That's a really fascinating disconnect. So what about us? What about what we pay at the grocery store? These ups and downs actually reaching our wallets.
Well, that really begs the question, doesn't it? How do producer prices translate into consumer prices? If you look at the chart, the one comparing the indices, you can see the consumer price index, the CPI specifically for milk, cheese, and eggs, right alongside those PPIs we just talked about. And the CPI, you can think of that as basically tracking what you, the consumer, are actually paying at the checkout. So this comparison, it allows us to track how the costs, production costs, processing costs might be flowing through, or importantly, not flowing through to your shopping cart. This is really where we see that interplay of market forces. You might see periods where producer costs are shooting up, but consumer prices aren't really moving that much, or vice versa. Perhaps it's down to retail margins or fierce competition between supermarkets or other factors in that really complex supply chain from farm to fridge. It's not always a straight line, a direct one-to-one relationship.
Right. Not a straight line at all. Okay, so wrapping this deep dive up, we've navigated quite a landscape today. Fluctuating milk production, those really significant shifts in dairy imports and exports, and this complex web of pricing from the farm gate right to your fridge. Yeah. It's clear this isn't just about, milk. It's about a really critical part of our economy.
Absolutely. And understanding these dairy digits, I think it provides such a crucial lens, a way to look into the economic health, the dynamic nature of the whole dairy industry. It's really a reminder, isn't it, that even the simplest things, the everyday items we buy, they have this profound economic story behind them, influenced by everything from global markets and local conditions right down to consumer demand. So yeah, maybe next time you're pouring milk into your coffee, just consider that complex journey that simple liquid is taken to get there.
A really good point. Okay, so given everything we've explored today, from those trade shifts to the intricate dance of prices, here's a thought for you listening. What's one thing you'll think differently about the next time you pour that glass of milk or, add cheese to your meal? And maybe how might these trends we've talked about today, the imports, the exports, the prices, how might they ultimately shape the future, the availability, the cost of your favorite dairy products down the line? Something to chew on.